2017, the Bitcoin boom. 2018, the ICO boom. 2019 will be the boom of. Stay tuned for another episode of No Fun News. What's up, everybody? This is your host, B Roots, with another episode of No Fun News. And today we are going to talk about the no other security tokens. Security token offerings. Is it the next big thing in crypto? That is the question that everybody is asking today. Initial coin offerings are in the sights of regulators and not in a good way. Consequently, some projects are pivoting to security token offerings. If you're not familiar with security token offerings, also known as STOs, maybe you should be. With regulators gunning for initial coin offering and now going after decentralized exchanges, industry players are looking at new ways of raising money. Changing the name to Token Generation Event doesn't cut it with most regulators, and in and of themselves, neither do simple agreements for future tokens. According to CoinShares chairman Daniel Masters, STOs will be the next big thing in crypto. Speaking as part of a panel at a breakfast briefing organized by Dow Jones media outlets Financial News and MarketWatch, he identifies a third wave for crypto. According to Masters, Bitcoin ushered in a new era in value transfer, with the second wave led by Ethereum with its frictionless way to globally form capital, and today a third wave of security tokens with particular advantages for assets that have historically remained in private hands. CoinShares sponsored the event and is the companies behind the XBT provider Bitcoin and Ethereum exchange traded notes. Trading in the ETNs in the US was temporarily suspended in September because of confusion over the difference between ETNs and exchanges traded funds. The untapped value of privately held assets. Some of the largest companies in the world are privately held, such as Cargill, for example. Valued at more than $109 billion, that dominates agribusiness of Koch Industries, which straddles sectors encompassing consumer goods and oil. It is valued at $100 billion. Many are, of course, valued less lawfully. These companies prefer the freedom of movement that saying private allows, but if they continue to come to public capital market for funds, their values would rocket because of the simple fact that there are more participants in those markets. It is all about liquidity. Now think about a whole host of other privately held assets, such as classic cars, art, stamps, gold, and so on. All of these assets could be tokenized, and in so doing, their value enhanced. It could open up a whole new world, typically hidden from the view behind the privately equity and venture capital shutters, where mere mortals are forbidden to tread. Legacy financial institutions will not be able to avoid the tokenization wave, insists Masters. He expects a magnetic force to pull them towards these possibilities, regardless of their aversion to all things crypto. So what went right and what went wrong with ICOs? Briefly, let's go back to the second wave to see how we get to the claimed third wave in the evolution of the crypto space. Initial coin offerings have been hugely successful. For the first time in human history, it was possible for anyone in the world with access to the coding skills to solicit for its investment capital from contributors potentially at any location in the world with internet access. It is estimated by ICOdata.io that $13.3 billion has been raised by ICOs since 2015. By any measure, that has to be seen as a success. But this year, the story is different, with investors sitting on losses of 90% or more. Far from offering diversification, many of the tokens have turned out to be worthless, as the projects and the services they aim to provide has closed. Put this another way, contributors to ICOs stuffed the bank accounts of the founders and team members with Ethereum and were left with no control over how the investment capital was used and no claim to a share of company capital. Contributors to ICOs are paying for access to network services. Some investors may have confused that with a share that gives the bearer legal ownership of a portion of the company. But ICOs are not initial public offerings of the equity markets, despite the deliberately confusing designation. ICO investors, it is assumed, were mostly aware of the crucial difference between token holder and shareholder, but invested anyway. Indeed, they continue to invest in ICOs, although at a much reduced rate, in the expectation that the value of the native utility token will rise. The problem with all of that, from a regulatory stance, is that ICOs look very much like securities when judged against the Howey test used by the U.S. Securities and Exchange Commission, also known as the SEC. For that reason, many ICOs began to exclude U.S. investors from their fundraising efforts. With hubs developing in Switzerland, Singapore, and Malta, there were no such stipulations were applied, although reputable projects still require anti-money laundering and know your customer rules to be adhered to. ICOs are not just a problem for regulators. They are obviously a problem for consumers caught on the wrong side of fraudsters. So what do? We enter the security token offering. But with the SEC and various US states starting to clamp down hard on ICO promoters for not registering as sellers of securities and abiding by the appropriate securities laws, with other jurisdictions likely to follow in their footsteps, the days of the ICO may be numbered. That's where security tokens come in. Instead of trying to figure the regulators, there are those who seek their warm embrace. Cypherpunks and others wedded to hopes of decentralized disruption of the banks and other financial institutions may well be suspicious of security tokens. Are they not merely another vector, such as putative Bitcoin exchange traded funds, for the takeover of the crypto space by the mainstream? The most successful STO to date is from T0, which raised $134 million for its trading platform. And then there was electric scooter company Spin's $125 million raise. T0's investors were required to have a fully funded signed agreement for future equity prior to the August 6 of 2018 close of the company's STO. So, ladies and gentlemen, sounds like everything is going towards the security token. Why aren't you hearing about ICOs anymore? Why aren't you hearing about all these different little ways to raise money? Everyone's afraid of the SEC and being labeled as a security when they think they are not. We're all waiting for the SEC to make their decision and tell us what is the difference between a security, a utility, and what is and what isn't. But Polymath, T0, all these security things that are coming out might be the brink of a new wave. Is 2019 the boom for cryptocurrency in the security space? I don't know. What do you think? Do you think it is the next big boom? Right under the comments below. Don't forget to like and subscribe. Until next time, peace to the Middle East. See you in the next episode of No Fun News.